Phil Muscatello and Finpods are authorised reps of Money Sherpa. The information in this podcast is general in nature and doesn't take into account your personal situation. Shares for beginners. Weekend Watchlist.
G'day and welcome back to Shares for Beginners Weekend Watchlist, where we take a close look at an individual company that you may wish to consider for your watchlist. It's not a recommendation to buy, but a way for you to learn how Stockopedia screens for value. Joining me today is Chris Batchelor, and we're talking A2 Milk, ASX code A2M. G'day, Chris.
Hey, Phil. Great to be with you again.
So were you up early this morning waiting for the NVIDIA earnings call?
No.
I don't know. Everyone seems to be so interested. That's the story of the whole of Wall Street at the moment, isn't it?
It is indeed, yeah. But no, I'm not one of the... I'm not a big growth stock man, so no.
Okay, so tell us about A2 Milk and the A2 Milk story and the kind of the star rating it seems to have had since fulfilling the Chinese infant milk story.
Yeah, for sure. Yeah, actually, talking about growth stocks, I mean, A2 Milk historically was known as a real growth stock, and it did have an incredible run. Now, that's really interesting because food products are not typically high growth, right? People don't suddenly start eating a lot more than they used to just because a new product comes out. And yeah, aside from the small amount of change due to population growth, and there's a documented trend where people tend to eat more protein as the level of wealth increases. But aside from that, the success of one food product generally comes at the expense of another. So, if you think about it, if you decide you're going to drink A2 milk, well, you're substituting it for another brand of milk. You don't normally double your milk consumption. So consequently, the success of A2 milk was largely due to great marketing. They were able to exploit a competitive advantage that they had based on the perceived health benefits of the type of milk. So just a little bit of background here. All milk actually contains the A2 beta-casein protein. However, regular milk also contains the A1 protein. And where A2 milk is different is that they only have that A2 protein. And they certainly claim that it's therefore gentler on the stomach due to the absence of the A1 protein. Now, it was an interesting set of circumstances came about back in 2016. So we're going back in time a bit now, but Lion Group, which was a large global drinks group, at that time they owned dairy farmers and Pura fresh milk products. And they started labeling their milk with the phrase contains A2 protein. Now, that's technically true. The A2 milk in Lion's milk did contain that. So too does every carton of milk everywhere, right? So using that as an implied point of difference was a bit misleading. At least that's certainly what A2 milk claimed, and they sued Lion. But then, to make things a bit more spicy, Lion countersued A2 milk for their insufficient evidence about the claimed health benefits that they were purporting. In the end, the parties settled the disputes, so it never actually got tested in court. It would have been interesting to see would A2's evidence of the health benefits actually stood up under a court jurisdiction, but we never got to find out. They have been building some evidence to support their health claims. They've done some health, various trials and so forth. What all that led to was during the late 2010s, this stock really took off and it actually exploded and ran all the way up to $20 in 2020. And then it came crashing all the way back down to $4-5 sort of dollars. So I guess we'll talk about that more as we go along.
Yeah, so why is the share price so weak after such a good year, while growing its share of the lucrative infant formula market in China?
Yeah, okay. So, as you said, it's actually had a very strong year, A2, both in terms of the business financially, and also if you look at the share price over the course of a year, it's done really well and it's up a long way. But as you said, the most recent results came out a few days ago and the share price took a tumble, dropped about 18%. So to understand that, maybe we should talk a little bit more about the drivers behind the business first. Then we'll explain what's changed and what's caused that to happen. So when we think about A2 milk, most of us here listening in Australia probably think about when you go to the supermarket and you choose to buy A2 milk off the shelf. I know I poured some on my cereal this morning.
And do you feel better for it?
Oh, I don't know. I've been doing it for years, but I certainly managed to believe the marketing hype because we buy it all the time. So, that's obviously a part of their business, and they compete with all the other brands of milk. They have about 11% of the market share for milk, just standard, if you want to call it milk, off the shelf in Australian supermarkets. But that's a very small component of their business. Now, to really understand A2 milk, you need to understand infant milk formula. That's where they make most of their money. And you need to understand China. The majority of their revenue, 68% to be precise, comes from China and what they call other Asia, but it's mostly China and some of the other Asian countries around there. And so the ability to sell that milk into China is really what drives the performance of this business. And they've been very successful at it, but it hasn't been without hiccups. And there's various challenges associated with that. Some of those include the way it's marketed. It's marketed a variety of different ways, and it's quite fascinating to try and understand. They have the Chinese label milk formula and they have the English label milk formula. So your first reaction is, well, obviously they sell the Chinese one in China. And yes, they do, but only about 60% of their sales from China are the Chinese label product. The rest are an English labeled product that is also sold into China.
Are there trust issues there?
Yes, that basically there's a perception that if you're buying a Western product, that it might be of a higher quality. So whilst it's the same product, just with a different label, that perception persists. But the other component to it is that quite a bit of the milk that is sold into China, I mean, you would typically think it gets sent over in large crates and distributed through stores, etc., in China. And that does happen. They have a arrangement with I think it's called Mother and Baby store chain throughout China, and they distribute a lot of milk through them. But they also use the Daigou channel. So that's students and tourists in Australia buying the products when they're here and shipping them back or taking them back to people they know in China. They use a lot of cross-border e-commerce, other what they call offline to online channels, and they cultivate these networks. And that actually forms a part of the reporting that they include in their China segment. So yeah, there's a whole variety of different ways that they're selling product into China. You may have heard, over recent years, not so much the last 2 years, but prior to that, there was a bit of issues with selling Australian product into China. By the way, this is a New Zealand company, so most of that exporting is going from New Zealand to China rather than from Australia to China. But China clamped down on the importation of infant milk formula and required businesses to get certified to be able to sell into their market. And so that became a big issue. Fortunately for A2 Milk, they have been certified. So that actually gives them a competitive advantage. And just in the last year, they've managed to get into the top 5 brands of infant formula in China now. They have 7.3% of the market share. So they're actually one of the most successful brands in China, well ahead of brands like Nestle. They really have done very well there. So getting back to the point about why did the share price fall? I know we're jumping around a bit here, but so what that boiled down to, again, it's mostly China. In China, if you've been following China just more broadly, there's a real demographic issue happening in China. The overall population is falling, but most of that is being driven by the fact that birth rates are really falling significantly. Over the last 4 years, the birth rate in China has actually fallen by 39%, which is quite a staggering amount, which means, of course, there are less mothers with young children requiring infant milk formula. So the overall market for infant milk formula declined by 8.6% in volume over the last year and 10.7% in value. Now, despite that, A2 Milk have managed to increase their share of that market, so they're still doing quite well. But clearly that's a demographic trend that is working against them and that they need to manage, to put it mildly. So what happened when the price fell, when the results were announced? The reason was not the results. The results were fine, but it was the commentary around the expectations moving forward. And there were a couple of key things for that. Basically, the outlook was well short of expectations. And whilst they're still expecting growth, it was lower growth than what had been anticipated. And in particular, they'd had this target of revenue of New Zealand $2 billion, and they had been aiming to hit that by 2026, and they pushed that out to 2027. So that was a real, I guess, a disappointment to the market, and that's why you've seen this fall in the share price.
Are you picking shares on gut instinct? Buying on press tips or rumours? Do you struggle to find the time to keep up with the research and analysis that goes into evaluating potential stocks? Stockopedia are pleased to offer a special deal to listeners of this podcast, a 14-day free trial and a 10% discount on the first year of membership. Sign up now at y.stockopedia.com/SFB. There's no better time to access the most comprehensive, easy-to-use investing toolbox for DIY share investors. 10% off, 14-day free trial and a 30-day money-back guarantee. That's y.stockopedia.com/SFB. Was there also a stoush with another company, Synlait Milk, that affected the profit results and pushing it out by that extra year?
There was a stoush with Synlait Milk. Didn't really affect the profit result though. So the issue with Synlait, it's a complex situation. Most of the milk, nearly all of the milk powder, I should say, that A2 sell is not produced by them. It's actually produced by this company, Synlait Milk. Synlait Milk is quite a large company, again, New Zealand based, and A2 Milk own 20% of Synlait. Now, Synlait have had the exclusive right to manufacture all of the infant formula marketed under the A2 brand, and that's become a real source of contention between the two firms, and A2 really wanted to move away from that exclusivity. They're still going to use Synlait, but they didn't want to be tied down to having to use them exclusively. And so, yeah, they've been having a lot of argy-bargy over that. And just last week, they reached a resolution on that where Synlait have agreed to end the exclusivity component of that contract in exchange for a $25 million payment. That's not really going to be a major burden for A2. A2 have got over $900 million in cash sitting on their balance sheet, so a $25 million payment is not significant. But what that means is they'll be able to produce some of their own formula. They own a processing plant in New Zealand called Matura Valley, and that's actually been operating at a loss. And so the hope is that by being able to use some of the capacity of that plant to produce a portion of their infant formula, they will therefore be able to generate higher margins, bring that plant up to, break even at least. And that will, of course, impact their overall returns for investors. It also gives them more security around their supply chain. One of the issues, if you look at Synlait Milk in Stockopedia or anywhere really, you'll soon see that it's a company with quite a lot of troubles. And they're actually to the point where they have had to do a equity raise that's in progress at the moment because they're running out of resources. And so A2 Milk have backed Synlait's equity raising and said that they will subscribe for the portion of shares that they're eligible for, to support that. So Synlait's a company in a bit of bother, and when they have problems, that affects A2 Milk. So they had problems towards the end of the financial year, and that caused supply constraints. So A2 Milk wasn't able to deliver as much formula into China as they would have liked because of that supply constraint coming from their supplier, Synlait.
Are there also issues with freight costs and distributing the product?
Yeah, well, there are. So listeners may or may not realise is the vast majority of A2's product is exported. As we've mentioned, most of it's going to China. There is also a significant US business. And so, of course, if you're shipping your product from New Zealand right across the world, then freight becomes a significant cost factor for you, and that can impact on profitability. And there have been higher freight costs on the exports to China, so that has been an issue for them. However, there has been some improvement in the freight costs to the USA, but as I mentioned, there's much more produce going to China than there is to the USA. So yes, there have been issues around freight.
So running the Stockopedia numbers over it, what are you seeing for this company? What's the outlook and is it good value?
Looking at Stockopedia, the first thing that really jumps out is the quality score. It's got a very high quality score coming in at 97. The balance sheet is really strong. As I mentioned, $969 million in cash and no debt.
What kind of dollars is that? Aussie dollars or
New Zealand
NZ?
dollars? Sorry, yeah.
Right, okay.
Pretty much everything I say is New Zealand dollars because they report in New Zealand dollars. So what's interesting, when you look at the business over the last 5 or 6 years, their revenue peaked in 2020 at a level of $1.73 billion. It then dropped away and has yet to regain that level. They do anticipate that they will pass that in 2025, the coming year. And as I mentioned, they're now expecting to get to $2 billion by 2027. So they fell off a bit of a cliff in 2021, but they've been steadily rebuilding and steadily growing since that point. So the last lot of results, they were pretty decent. Sales grew 5.2%, particularly in China. China was up 14% despite those demographic challenges that we mentioned. USA was up 8%. ANZ, Australia and New Zealand, was down 14%. Part of that's because they, as I mentioned, the way they report some of their earnings from this market, product that's sold here but then ultimately goes to China, is classified as China. And so part of that was that particular issue, but part of it also was just a drop in sales. But liquid milk sales were up nearly 5%. They did mention challenging time with the cost of living pressures. So your A2 milk is obviously a premium milk. And so if people are feeling a bit pinched, they have been shifting away from those branded milk brands to the private label brands in the supermarkets. But nevertheless, net profit was up 7.7%. EPS was up 9.2%. So the results themselves were very strong, and that's reflecting in a really good quality score where we can see good margins, good return on equity. By good, I'm talking about 14% sort of numbers. But I guess that then leads us into the other components of the score. Looking at the outlook for the business, as we mentioned, the expectations were a lot higher. And then when management made their announcements, they obviously fell. So that's affected the momentum score. The momentum score has dropped not only because of the big drop in the price, but when you look at the expectations for earnings, they have been coming down not only in the most recent period, but also throughout the year. There were some significant declines roughly 12 months ago. So that momentum score is lower than we would expect. It's still 64. It's not a disaster, but it's not as high as you might otherwise expect. And the market basically is forecasting growth of 6% to 7% over the next couple of years, both at the revenue level as well as at the profit level. Now, if we look at the value component, it's 51, right? So it's pretty much slap bang in the middle. As I mentioned, this stock was a real growth stock. Back in 2015 to 2020, revenue grew from 155 million in 2015 to 1.7 billion in 2020, right? That's over 10 times in 5 years. It's quite staggering for a company that's selling the most plain vanilla of products, milk. But what happens sometimes with a stock like that is that investors become accustomed to those sorts of growth rates. And so they start to price it as a growth stock. And as I said, it hit $20 in 2020. But then it came crashing back to reality. And today, it's a steadily growing business. It's a high quality business. It's got a great balance sheet. But the price still reflects some of that growth mentality of the prior years rather than being like a steady accumulator. So consequently, even after the price fall, it's still only average in terms of the value score. The forward PE is 24. That's at the higher end of the market. It's not excessive, but it's reasonably high for, as I said, a consumer staple business. It also doesn't pay any dividends, which is quite interesting. The market is forecasting that may change this year, but they haven't paid dividends previously, and they've built up this huge cash balance. So it'd be interesting to see how that plays out.
Yeah, and with the recent share price weakness has to be looked at in the context of the year-to-date share price performance, which has been pretty good as well. And as you say, this is obviously part of the growth stock story.
That's right. So you only have to go back to November, and the price was trading around $3.80. Today, it's $5.70, so nearly $2 higher, despite that 18% fall at the start of the week.
So hopefully listeners will be pouring their A2 milk over their cereals this morning as they wake up to this episode. Chris Batchelor, thanks very much for joining me today.
Thanks, Phil. It's always a pleasure.
Thanks for listening to Shares for Beginners. You can find more at sharesforbeginners.com. If you enjoy listening, please take a moment to rate or review in your podcast player, or tell a friend who might want to learn more about investing for their future.